Hi and welcome to the Market Alert for Tuesday, the 25th of April 2022. So bonds bid, stocks skid as debt ceiling doubts soar. Yes, we've got that to come as well, along with the Fed chair, but it's after the interest rate potential rise on the 3rd of May. I think it's June when they have to do something about raising the ceiling by, I don't know how many trillion it is, 2 or 3. So that's already starting to throw something into the mix here. Dollar and yields all fall on growth concerns after soft US data, and the US stocks were mixed ahead of big tech earnings and with headwinds from weak data, according to this news item yesterday. Speaking of news, today it's an Italian bank holiday, and that's about it. Let me just refresh this because it's the wrong time. It's 3 p.m. We've got the consumer confidence. That should be an interesting one. 104 is forecast. Previous 104.2. New home sales will also actually be interesting. That's up 640 last time, 633 forecast there. So still quite a significant number of new homes forecast there, if the numbers are to be believed, of course. Okay, let's move on, have a look at the markets and see what they did during yesterday. So there were another mixed session, so we'll kick off with the Dow, see what it did. So in the Dow, you can see there that we moved up yesterday, but overnight there is some weakness at the moment. Market coming back above the 20 bar moving average, and we are actually oversold at the moment as well, with some sort of divergence here where the market's made a lower low, but the momentum, as you can see down the bottom, is just starting to switch to the upside. However, the market must remain above the 5 bar moving average if it is to move higher, but at the moment it's sideways to lower there. And in the 30-minute chart, we'll get a clearer picture of what happened yesterday. You can see that the market found support just through the low at the psychological level. We had the increase in volume there. You can see the volumes coming in. We were oversold. We got the crossover, and then the Dow moved up 200 points through the 200 MA and the DP and closed with a big bar. You can see how this was giving the market some grief. So the only way to get through is to drive hard, which it did. It traded up to the previous day's high, is what I can only assume this grey line to be. Then the market came back with the news, came back to 62% from up down to there, and once again you can see the activity there as the Dow kicked off, and then the selling disappeared and the market was moved back to the upside with an 89% retracement there. And inside of here we've got another 89 before the markets move lower on the overnight, where it's finding support at the moment at the DP and just needs to get back above that 200 MA, but at the moment continuing to show further weakness. And in the implied volatility, well, we had a spike up yesterday for sure from that low of 12.29, which is very interesting because it's making this look like that's the sort of top for the market at the moment, despite the fact that the Dow managed to move back to the upside. It's just a matter of watching this, see how far it can come back before it then moves to the downside. But big jump yesterday in the implied volatility, which says that the options sellers are slightly wary of the current market activity. In the German DAX, a bit weaker here. The 89% retracement from here back up to here stopped the market yesterday at 15,899. Market down overnight as well. I'm back below the 5 bar moving average as I record. In the 30-minute chart, we got to the DP in the morning. A market opened, slammed down, came back, 62% retracement right on the 200 MA. And then the market was free to move up to the previous day's high, which was Friday's. And then once we closed back below Friday's close and the high, the market came all the way back to the psychological level and 200 MA with an increase in volume before it then moved up once more. Not much momentum on the upside there. That just looks let's just measure that. It's only about 50% retracement of that swing there back to there. We then had a crossover with some supply, which you can see there. We were overbought and then the market making its way down. And overnight, we're already sitting on the low. Unlike the Dow, which is nowhere near yesterday's low, the DAX is already sitting at this level. So the low in the S1 needs to hold here. Otherwise, we're going to see prices continue to the downside. In which case, if they do, you have to go back to the daily chart. And from this low to this high, this will give you the numbers on the downside of where the market is likely to find a bit of support. So they would be the fib retracements there, and you can see at 78.89 ties in with the 20 bar moving average there as well. And in the 5-minute DAX, the futures was fairly quiet. Then we spiked up to the 200 MA. The market failed here and then traded down just to retest the low to the left. And you can see there a lot of volume, including demand, and I wouldn't be at all surprised if we just move this down a bit. No, we haven't got that there, of course, because the momentum was already starting to move. I was looking for a crossover, little diamond, like so, but we haven't got that, of course, because the momentum had already moved to the upside. Crossover came a lot sooner. So we traded up to the 200 MA, then we had another pullback to the BRN and the the DP, and then eventually we broke through the 200, which you can see there, the market continuing, and then the 20 and the 50 becoming the support as the market moved to the upside. Everything was going swimmingly until we got to the open of the Dow. We were okay for the first 20 minutes, and we were at Friday's high, and then the market then selling off. And notice how the 200A then becomes a resistance level for the market, as does the 50 and the 200 there. So in the evening, the market just treading water, but overnight further weakness there. And you can see at the moment we're actually below the low and sitting on the S1. So we've got a retracement in there of 100%, and we're oversold at the moment. So they probably do their best to try and bring this back at 7 a.m. And in the S&P 500, similar to the Dow there, the market up yesterday, closing back above the 5-bar moving average, but again showing weakness overnight. This closer to the low than the Dow as well. But yesterday, the market retracing 89, then moving back up to the R1 and Friday's high, and then selling off as well. And you can see once it's sold off, we get the market pulling back. It looks again about 89% retracement, 78.89, and at the S1 then we get a reversal, and then on the upside we get, as we draw this in here, 89% retracement. Market's made its way back through the close, the DP, all of the averages, and is currently quite aggressively short. So let me just get rid of the fibs there, and let's just draw a few in on the downside. So this is where the market is at the moment. It's just below the 62. It's got the 78.89 S1, and then the low there if prices do continue to move to the downside. In the FTSE 100, again, still in that sideways range that you can see there at the moment. Very tight range as well. Looking a bit weakish overnight. Will it take out yesterday's low? Well, it's just there. That's for sure. This is where the market picked up yesterday, 8 a.m., going through the DP and the close. But you can see the selling coming in there in the red bar, bringing the market back. It tried to hold and then had to succumb to the selling pressure, and then the market drifting down on the overnight there. GBP JPY trading up to yesterday's high on the overnight, 167.96, up during not the high of yesterday, the high of last week where we tried to break through. Certainly through the high of yesterday, and at the moment showing a bit of weakness as it's is coming back there. But yesterday morning, the market trading down towards the DP. We see a lot of volume there, soon bringing the market back, crossover, divergence, and momentum switching to the upside, and the market moving up and then just holding there. Gap down on the Asian market, and then has moved back up to the R1, taking out yesterday's high, but failing to hold there. So you've got the market coming back 62% and then making its way back down to that BRN. It's got the 50 EMA, the close, and then the DP there as well, with support from the overnight to the left there. So these areas all important ones to keep an eye on. In the pound, not too dissimilar from the FTSE, just a bit more volatility, but stuck in a range as well. As we can see, the prices coming back there, a good 78% retracement. I'll just draw that in to show you. There you go, bang on 78. You get used to seeing these sort of swings, and you can judge more or less which fib retracement they are. So a bit of weakness there as well, despite the fact that yesterday we had a bit of volume moving the market back to the upside, but we are overbought in the daily chart. In the 30-minute charts, again, yesterday morning, we kick off from the DP level. Market then found support at the 200 MA each time that it tested it and came back. And then all of the averages shift into the right order, 5 above the 20, 20 above the 50, 50 above the 200, keeping that trend intact. The market's gone through the high of yesterday, but you can see that overnight we had some selling, and now we're oversold. So watch the DP level, because this coincides with the 50 EMA, an area where prices are likely to find a bit of support there. And in the US dollar, we can see there, let me just bring this across, so we've got that 101 level in from here. The market down yesterday for the US dollar. Again, we're putting in a retracement here at the moment. We're around 62% retracement there at the moment, so could find a bit of support here for the US dollar. Now finally, in the metals, also getting into a bit of a sideways move. I expected a bigger sell-off in the metals yesterday. Wasn't to be so, but the market, despite managing to come back overnight, has failed to hold, as you can see there. So yesterday morning we had the pullback. Market consolidated, then waited for the LBMA to open. See how they bought back at the low yesterday. Biggest volume bar yesterday. Moving the market up, finding support at the DP, and then through to the R1 on the overnight, back below yesterday's high. So a bit of weakness around at the moment. The market will want to try and hold above the DP and the psychological level there of $25 per ounce. Very important level there for gold, for silver. In the gold markets, also stuck in a bit of a sideways range for the last few days, and this is what it looks like in the 30 minutes up to the DP, found resistance, and the close shakeout at 130, and then bring in the market up. So we can see there, and then up on the overnight quite nicely, and unlike silver, is currently finding support at the high and the 200 MA in the 30-minute chart there, so a bit stronger than silver at the moment. And just to confirm this, all you need to do is to look at the gold-silver ratio, and if it's green, it means that gold is holding its own and silver's weaker, and that is what it's showing us at the moment. That depends on whether the dollar's going to bounce off that 62% retracement and move to the upside, see if there's any firmness coming into the market there. But at the moment, we've got a bit of strength overnight in the dollar, but silver certainly needs to stay above that $25 range to continue to move to the upside. Okay, that's it for this one. Let's see what impact the consumer confidence has on the market today, and of course the new home sales as well. And with that, I will conclude, and as ever, thanks for watching. See you in the next one.